Markets just had a strong week, but the bigger question is what happens next? After a recent pullback, stocks moved higher and investors are now trying to determine whether this is a turning point or just a temporary rebound. Today, we'll break down what's happening in markets, what's driving recent volatility, and what investors should keep in mind moving forward. I'm Eric Pettway, Chief Investment Officer at Journey Advisory Group, and welcome to CIO Corner. Last week, equity markets moved higher, with the S&P 500 up 3.5% and the NASDAQ gained 4%. Even with that rebound, the S&P 500 is still down about 3.5% for the year. International markets also outperformed last week and continue to lead U.S. equities so far in 2026. Right now, markets are looking for stability as they respond to a mix of global developments, economic data, and changing expectations for interest rates. In the coming days, additional economic updates should provide more insight into the overall strength of the U.S. economy. At the same time, bond markets are beginning to reflect the possibility of higher interest rates in 2026, depending on how inflation and growth evolve. And that brings us to this week's chart of the week. This week's chart helps put recent market movement into perspective. At its recent low, the S&P 500 had declined about 4% from its previous peak. While that can feel significant in the moment, it's important to remember that market pullbacks are a normal part of investing. In fact, history shows that the S&P 500 has experienced multiple pullbacks of 5% or more in a typical year, yet markets have still delivered positive returns in most years over time. For example, even in years with meaningful short-term declines, markets have often recovered and moved higher as conditions improved. One of the biggest challenges for investors during these periods is the temptation to try to time the market. The reality is that some of the strongest market days often occur shortly after the weakest ones, making it extremely difficult to get in and out at the right time. On the other hand, waiting for a large pullback before investing can also come at a cost. Historically, sitting on the sidelines while waiting for the perfect moment has meant missing meaningful market gains over time. The chart we're showing today highlights this clearly, meaning even a small number of the best market days can have a significant impact on long-term returns. That's why, despite short-term volatility, maintaining a long-term perspective and a disciplined approach has consistently been one of the most effective ways to build wealth over time. We hope CIO Corner and the Chart of the Week provide helpful perspective as markets continue to evolve. If you find this content valuable, you can follow Journey Advisory Group for future updates. And if you have questions about your portfolio or financial plan, connect with your Journey Advisory Group advisory team. Until next time, remain calm, stay focused, and most importantly, stay the course.